Before Wall Street, before the British pound, before the Dutch invented the stock market, there was a financial system, so advanced that a fund, before the British, connected 3 continents. And it contained the world has forgotten who built modern finance. It wasn't Europe, it wasn't America. It was the Islamic civilization, and this is the story they never taught you in school. Now imagine doing business in the year 600 AD. There are no banks, no contracts anyone enforces, no way to send money across a border without physically carrying it. Trade existed, but it was brutal and unfair. The rich loaned money at crushing interest rates that trapped the poor forever. Europe was fragmented into feudal kingdoms that could barely trade with neighbors. China was closed. India was divided. The world was economically paralyzed. Into this chaos came a civilization that built something the world had never seen: a financial system based not on exploitation but on principles. Before Wall Street, before the British pound, before the Dutch invented the stock market, there was a financial system, so advanced that a fund, before the British, connected 3 continents. And it contained the world has forgotten who built modern finance. It wasn't Europe, it wasn't America. It was the Islamic civilization, and this is the story they never taught you in school. Now imagine doing business in the year 600 AD. There are no banks, no contracts anyone enforces, no way to send money across a border without physically carrying it. Trade existed, but it was brutal and unfair. The rich loaned money at crushing interest rates that trapped the poor forever. Europe was fragmented into feudal kingdoms that could barely trade with neighbors. China was closed. India was divided. The world was economically paralyzed. Into this chaos came a civilization that built something the world had never seen: a financial system based not on exploitation but on principles. Before he was a prophet, Muhammad was a merchant. This is not a side detail, it is everything. He worked for a wealthy businesswoman named Khadija, managing her trade caravans across Arabia. He was known throughout Mecca as Al-Amin, the trustworthy one. In a world where business fraud was normal, his reputation for honesty made him extraordinary. When Islam spread, it spread through trade routes first. Muslim merchants carried not just goods but a system, fixed weights, honest measures, written contracts, and a moral code for commerce. The Prophet himself said, "The honest merchant will be with the prophets and the truthful on the day of judgment." Finance was not separate from faith. Integrity was the product. Trust was the currency. And trust, it turned out, was the most valuable thing in any economy. Between 750 and 1258 AD, the Abbasid Caliphate built the most sophisticated economy the world had ever seen. Baghdad was not just a cultural capital. It was the financial capital of the entire known world. At its peak, Baghdad's GDP represented nearly 30% of global economic output. Merchants from China, India, Africa, and Europe all converged on its markets. The city had specialized trade districts, quality inspectors, consumer protection officials called the mutasib, and a legal system that enforced contracts between strangers from completely different cultures. This was not a bizarre economy. This was an organized, regulated, internationally connected financial system centuries before Europe had anything resembling it. The Golden Age produced not just poetry and astronomy, it produced the world's first sophisticated commercial infrastructure. They invented the check 1,000 years before your bank did. Here is a fact that will genuinely shock you. The modern check, the financial instrument you still use today, was invented by Muslim merchants in the 9th century. They called it the sak, which is literally where the English word check comes from. Before the sak, if you wanted to pay someone in another city, you had to physically carry gold or silver across hundreds of miles of dangerous roads. Muslim merchants realized this was insane, so they created a written document that promised payment by trusted mert and Dorli banking houses. Across the Islamic world, suddenly a merchant in document in Baitent in Bad could pay a supplier in coal. This was the birth of paper-based finance. This was the first time trust metal as the foundation of a king you sent in. And it happened not in London, not in Amsterdam, not in New York. It happened in the Islamic world, 1,000 years before modern banking existed. The world's first banks were called serifs. Europe likes to say that banking began in Renaissance Italy with the Medici family in the 1400s. That is about 500 years too late. The Islamic world had fully functioning banks called serifs, operating across the Middle East, North Africa, and Central Asia from as early as the 9th century. These were not simple money changers. Serifs accepted deposits. They issued letters of credit. They transferred funds across borders. They financed merchants going on long trade journeys. They operated in networks, meaning a serif in Basra trusted the word of a serif in Samarkand. This network of trusted financial intermediaries created something the world had never had before: a transnational banking system. Money could move faster than people. Trade could happen at a scale previously impossible, and all of it ran without charging interest, using profit-sharing models that kept the system honest and both parties invested in the outcome. They funded the world through Waqf while Europe's poor starved outside castle walls and kings hoarded gold. The Islamic world invented something called the Waqf, a permanent charitable endowment. A wealthy person would dedicate a property or income source permanently to public benefit, not temporarily, permanently. The income from that asset would fund hospitals, schools, roads, soup kitchens, and libraries. Forever. By the 11th century, Waqf institutions were funding universities centuries before Oxford existed. They were running free hospitals open to anyone, regardless of religion. They were maintaining infrastructure across entire cities. This was not charity in the passive sense. This was institutionalized public finance. The world's first welfare system built not on government taxation but on voluntary permanent endowment. The concept of the modern nonprofit, the endowment fund, and even certain aspects of public financing trace their roots directly to the Islamic Waqf. For over 500 years, the gold dinar was the most trusted and widely used currency on the planet. Minted to precise weight standards, accepted from Spain to Indonesia, the dinar was the dollar of the medieval world. What made it powerful was not just the gold content, it was the consistency. Every dinar weighed the same. Every dinar was minted to the same purity standard. In a world where every king was secretly shaving metal off coins to stretch the treasury, the Islamic world maintained monetary discipline. Traders trusted the dinar because it never cheated them. That trust built the world's largest trade network, connecting the Silk Road, the Indian Ocean, and the Mediterranean into a single economic system. At its height, Islamic trade networks stretched from West Africa to Southeast Asia, covering more of the Earth's surface than any empire before it. If this civilization was so advanced and so globally dominant, what went wrong? In 1258, the Mongols destroyed Baghdad. The greatest library in human history was burned. The canals that fed Mesopotamia were destroyed and never rebuilt. The intellectual and financial capital of the world was wiped out in weeks. Then came internal political fragmentation and the gradual closing of the Ottoman Empire to outside innovation. Meanwhile, Europe, which had been absorbing Islamic knowledge through Spain and Sicily for centuries, began its renaissance. European nations funded exploration. And by the 1500s, the financial tools that Islam had built, banking, credit, trade networks, contracts, were being used by Europeans to build their own empires. The student had become the teacher, and the original innovator had been written out of the story. Here is the uncomfortable truth that economic historians are only now beginning to fully acknowledge. The foundations of modern Western finance are deeply Islamic in origin. The bill of exchange came from the Hawala system. The check came from the SOC. The concept of the joint stock company traces back to Islamic partnership contracts called mudaraba and musharaka. Even the word tariff comes from the Arabic word tarif. The algebra that underlies all modern financial modeling was written by a Muslim mathematician named Al-Khwarizmi. For 500 years, the Islamic world was not just participating in global finance. It was running it, inventing it, and setting the rules for it. The world didn't just borrow their spices and their silk. It borrowed their entire financial system and then forgot to say thank you. Subscribe to Finance Origins, where the real history of money gets told. Finance Origins.